One of the learning goals of this workshop is to understand various internal controls used by organizations to safeguard assets. When assets and money is there is also risk of losing. Therefore, organizations use various types of controls internally to safeguard their assets. There are 5 principles of internal controls which can be used to apply to various mechanisms to internally control, internally safeguard assets. The first principle is establishing responsibility. For example, in a company, the cashiers can handle cash receipts only. Others can't handle cash receipts. The second principle is to segregate duties. The duties are defined and distinct. For example, cashiers handle cash receipts. Another person does the recording in the accounting system, and a third person does the banking of cash. So there's a segregation of duties of who is receiving cash, who is entering that information into the accounting system, and who is doing the actual banking. The third principle is to document various procedures. For instance, for various cash payments, cash receipts, a pre-numbered sheets should be used. So that there's a sequence of cash receipts and payments, and the pre-numbered sheet sequences can help in identifying when to whom the cash was paid or was received. And also it allows to get approvals appropriately from people within the organization before a payment is being made, or even when the cash is received, and how the banking should be done. The fourth principle is the physical, mechanical, and the electronic controls. For instance, the cash should be stored in safes and vaults, and they can be opened and accessed with passwords only. So there's physical and mechanical and electronic controls are in place. Use cash registers to pay cash and also to receive cash. Therefore, there's physical, mechanical, and electronic controls are in place. The fifth principle is to independently verify cash-related controls. For instance, a supervisor can count cash daily and reconcile with the cash sales and with any adjustments, so that it is been independently verified that the cash has been received and has been reconciled. These principles, although outlined individually, they work in combination, sometimes 2 simultaneously, 3 simultaneously, 4 simultaneously, or all 5 simultaneously. In an organization, all these principles work in a congruent manner so that the assets are safeguarded.